What an action-packed 3 days it has been here at the festival, but to really unpack all that happened in the last 3 days, the big highlights, and importantly, what to watch out for in the coming year as well. We have with us a panel of experts that are behind, setting up this Global Fintech Festival, making it one of the largest such festivals in the world. Mr. Srinivas Jain from SBI Mutual Fund, Mr. Chris Gopalakrishnan from Axelor Ventures, Sohini from NPCI, and Yash Raj from BCG joining in. Sohini, gentlemen, thank you so much for your time here today. And Srinivas has been the UK Prime Minister also participating. What kind of collaboration can we see between a developed market like the UK and India in the fintech space? If you could give us a broad picture.
Well, I think that things are still shaping up. The free trade agreement is one for which I think everyone is looking forward to how this will shape up. But I have a feeling that a whole lot of fintech entities from in UK and of course from India are going to exchange a lot of these knowledge sessions together. It's going to continue beyond the GFF. There's a lot of exchange program that's being planned.
That is the hope.
I'm sure it will, because from everything that I saw, there's quite a lot that's happening between these two countries. And of course, when two prime ministers kind of make up their mind, there's no looking back on this. So it's a fantastic day, at least fantastic event for both these countries.
Yash, let me put you in a spot and ask you, if you were to really look at a big shift that has happened from GFF 2024 to 2025, whether that is, exporting our fintech, CBDC, everything that's been talked about. What do you think is the one big change that all stakeholders in the ecosystem need to stand up and take note of?
So, Ritu, I think this year has been in a different order of magnitude when it comes to really driving game-changing reforms and policy moves. And why this is important is because we have a very important gateway getting created in the form of Gift City.
Yeah.
And we saw in the inaugural a major launch of foreign currency exchange, which brings down settlement to a matter of 3 minutes, in fact real time. But it's more than that. I think that's a fulcrum through which talent, technology, capital, ideas, that really gets unlocked. And as PM Modi was quoted, if you tap into Gift City, you tap into the rest of the world. And I think this time, while everything is much better than last year, I think just the global integration of talent, technology, capital and ideas that has happened is very, very different.
Let me pick up on capital and ask you, sir, in your hat as a venture capitalist as well, after GFF, what is the sense you get? This funding winter we'd spoken about last year, which has seen some improvement, but we're getting a mixed picture when we talk to the founders here, especially on valuations, on the kind of check sizes they're getting. How are things shaping up on that front?
So first of all, we have had a series of IPOs.
Yes, and then it's been a busy week.
And also there is a lineup of other startups which are going to go for IPO.
Yeah.
So that has given a positive signal, and many conversations here talked about IPOs opening up, and that's giving an exit route for the venture capital industry and for the founders to go public. Second, the excitement that GFF 2025 has created, plus the large number of international visitors, especially investors who have come here, I think they got an appreciation of the length and the breadth of innovation that's happening in India. And I'm hopeful that that will now translate to, conversations started here, but result in funding and things like that. So I'm very optimistic that GFF opened up the funding tab for fintech startups.
Well, fingers crossed that happens, but any initial sense you could give us about the kind of investment decisions that have been taken, or what kind of investments could materialize out of this wonderful expo you set up here to showcase the kind of technology that is going behind the work in some of these companies?
So we don't have investment numbers, but the conversations are positive.
Okay.
The numbers till now, for example, we are now in October, right? So this fiscal, the numbers are actually as good or better than last year.
Okay.
So I am very optimistic that GFF only will now increase the interest in India.
Well, Sohini, balancing innovation and regulatory oversight has also been one of the themes that we've heard from some of the founders here. There was last year this talk of regulation stifling innovation at some point. now a spate of digital lending guidelines to payment aggregator guidelines and so on and so forth have come out. What is the sense there? I mean, are founders of the view that regulators are still playing catch up? Or do they feel comforted by the fact that certain guardrails have been put in place that makes things black and white perhaps easier for them?
So, Ritu, I think if you go by the launches that we witnessed here, and there were a bunch of NPCI launches, but there were also launches that the RBI Innovation Hub and in fact the RBI Fintech department put up, right? And if you look at those launches, I think the regulators really leading from the front. There was a sandbox announced, there were a few CBDC models announced, and it would be too much of a stretch to say they are catching up. I think they are really front and center. Of course, it is the regulator's role to ensure that the guardrails are put in place, but the vibrant ecosystem, what we see here, and also the very participative journey of the regulator, I think it puts us in a very, very good place.
Okay.
So, we have had lots of roundtables, not just with our regulator, but the international
Global,
regulators
17
also.
regulators are part of the GFF
so,
this time.
Those conversations actually will now, I believe, result in the regulators getting the feedback from the startups. Guardrails are necessary, I believe. And regulators now will probably take those inputs, and hopefully there will be now some let's say, modifications in the coming days, I feel.
Well, Yash, since you also speak to a lot of these players in the industry, what has been the single biggest ask this year?
So, I think there are actually not one, but there are three things which are very important. And there are three numbers that kind of matter. The first is affordability. Any innovation that we bring, it needs to touch as many Indians as possible. And we speak about AI, and we have really made sure that we have a clear path towards AI for all. And the number that matters there is 200 rupees a month.
What is 200 rupees a month?
We believe in India we can make AI affordable for an average MSME owner or an average Indian customer for today as low as 200 rupees a month, but with India scale, it can go down to as low as 50 rupees a month in the matter of next 2 to 3 years. So I think that's the one thing. The second thing that matters is a number that I care about a lot, which is 10 lakh crores.
Okay.
Which is the amount of Indian capital, domestic capital that can get allocated to unlisted securities, basically startups in India.
So that's the dry powder you're talking about, 10
That's
lakh
dry
crores.
powder. It is sitting on the balance sheets of our institutions, our HNIs.
Waiting to be deployed.
And it can be deployed, and the path to getting there is also very clear. And now we need to walk the path. Still, just knowing the path doesn't mean you can walk it. We have to walk it, but that's it. So that's the second thing, 10 lakh crore on capital. And I think the third number, which I must credit Chris sir for, is 7 is equal to 1,000, which is that the max 7 companies in US are not 7, they are 1,000 companies.
Okay.
1,000 companies have been acquired by these 7 companies in the last 10 years. And we need to get the M&A market to be as liquid and vibrant.
So consolidation will be a theme to watch out for?
Whether it's consolidation or whether it is actually proliferation of new ideas, because there is a way to actually create liquidity. I think it's going to be the latter. But in India, the ratio of an M&A market to IPO market is between 1 to 1.5, depending on which year you look at. In US, that ratio is 17 to 18 times. And there also, the Reserve Bank governor has already made the move toward allowing banks to finance M&A, but I think there are a few changes that we can do in terms of our legal structure and how M&A is supported to also really create deep liquidity in the market. So I think those are the three big asks. How do we drive scale and affordability? How do we make capital available? And how do we really allow flourishing in a liquid environment so that ideas can find value?